When the CEO of BlackRock, the world's biggest asset manager, puts out his annual letter, you listen. It's not just a corporate update, it's practically a memo on the state of global capitalism. So today, let's deconstruct Larry Fink's 26 vision. It's really a roadmap for a world where the very definition of wealth is shifting under our feet, and you need to understand what that means. Fink kicks things off by capturing a feeling that probably sounds pretty familiar to a lot of us, this deep sense of uncertainty. I mean, from geopolitics to technology, it feels like the old rulebook is being thrown out the window. And that one sentence, really, it sets the stage for his whole argument for why we need to fundamentally rethink how our economies work, and, more importantly, who they work for. So here's how we're going to break this down following Fink's logic. First, we'll look at this idea of a world in flux and the massive divergence in wealth he's identified. Then we'll get into the role of AI as this great accelerator. From there, we'll explore his proposed solution, what he calls democratizing capital. And then finally, we'll see how BlackRock itself is planning to shape and profit from this new future. All right, so first up, this idea of a world in transition. The way Fink sees it, the era of super efficient global supply chains is kind of fading. What's replacing it is a new priority: national self-reliance. Countries all over the globe are scrambling to bring critical industries, we're talking defense, energy, technology, back home. But, there's a catch. This shift comes with a massive price tag. Building all these new factories and securing resources at home is incredibly expensive. Fink makes it clear that governments and banks just can't foot this bill alone. So that leads to a huge question. Where is all this capital going to come from? He argues there's really only one place big enough: the capital markets. And that question of capital brings us right to the heart of the problem, the thing driving so much of the economic anxiety people feel today. See, for the last few decades, capitalism has been an incredible wealth-generating machine. But according to Fink, those benefits have been concentrated in way too few hands. And this right here is the fundamental shift. This is the whole ballgame. It used to be that getting a good job was your ticket to building wealth. But what Fink's analysis shows is that since the end of the Cold War, the real explosive gains have gone to people who own assets. Stocks, bonds, investments, not just the people who earn a paycheck. And if you want to see just how big that gap is, check out this number. A single dollar put into the US stock market back in 1989 is now worth 15 times more than a dollar that just grew at the same rate as median wages. That one statistic, it explains so much about the pressure and the squeeze that families are feeling. For generations, right, the American dream was basically built on owning a home. That was a main way the middle class built wealth. But that old playbook is under a lot of stress. Houses are way harder to afford, and it's all your wealth tied up in one single asset. Fink's argument is that we just can't rely on that model alone anymore, especially not when the capital markets are sitting right there, offering diversified assets and, historically, much higher returns. Okay, so now let's throw a huge wild card into the mix: artificial intelligence. Fink doesn't just see AI as the next cool piece of tech. He sees it as a force that could pour gasoline on this wealth divergence, concentrating even more value in the hands of the companies and the investors who are ready to use it. But how does AI connect back to all this talk about capital? Well, it's not just about fancy software. The AI revolution is a physical thing. It runs on massive electricity-guzzling data centers. Those data centers need a mind-boggling amount of power. Fink calls this the AI infrastructure supercycle, and building it is going to take trillions of dollars of investment, all of which, again, has to come from the capital markets. And here's where things get really interesting, maybe even a little counterintuitive. While we're all talking about AI taking white-collar jobs, its biggest immediate impact on the job market might actually be a huge boom for skilled trades. You need people to build all that stuff: electricians, technicians, construction workers. And the demand for these high-paying jobs is set to just explode. So after laying out this pretty stark picture of challenges and growing inequality, Fink pivots. He starts talking about the solution. And it's not about slowing down technology or globalization. It's about changing who gets a piece of the pie. The goal, he says, is to turn more people from just workers into actual owners. This right here is his core argument boiled down. It's a simple idea, but it's incredibly powerful. If wealth today is built through ownership, then the only way to spread that wealth around is to make sure more people can become owners. It's as simple as that. So, okay, how do you actually do that? Well, Fink lays out a few concrete ideas. Some are pretty innovative, like giving every child an investment account at birth so they have a stake in the economy from day one. He also points to more immediate fixes, like opening up private markets inside our 401ks and using new tech like tokenization to make investing as easy as ordering a pizza from your phone. Which brings us to the final piece of this puzzle, BlackRock itself. Look, Fink isn't just diagnosing the world's economic problems from an ivory tower. He's actively positioning his own firm to be the primary engine that implements these solutions and, of course, drives its own massive growth in the process. To really get why BlackRock matters here, you have to wrap your head around the sheer scale we're talking about. With a staggering $14 trillion under management, when BlackRock decides to make a strategic shift, it doesn't just affect its shareholders. It can literally reshape the entire global financial system. And I have a very clear game plan. By 2030, they're shooting for over $35 billion in revenue. And get this, they expect almost a third of that to come from private markets and tech. They want to raise $400 billion in private markets alone. This is a huge strategic pivot toward the exact areas Think Fez are the future. We mentioned tokenization before, and BlackRock sees this as a total game changer. What is it? Well, essentially, it's about turning assets, like a piece of a company or a fund, into a digital token. The reason that matters is that it could smash the barriers to entry, making it possible for anyone to invest in a whole range of things right from their phone, as easily as sending a Venmo. So why should we pay so much attention to BlackRock's vision? Well, because historically, they deliver. Since they went public, BlackRock has generated a 20% annualized return for its shareholders. That's more than double the S&P 500. This is the kind of track record that makes people in boardrooms and governments all over the world sit up and take notice. So we end up right back where we started. Fink's letter lays out this future where wealth is less about what you earn and more about what you own. And that leaves us with this final, really powerful question. It's not just a financial question, it's a societal one. And the answer is going to define our economic future and decide whether the incredible growth that's coming is shared by many or captured by just a few.